What's up guys, welcome to another video, and this one's going to be completely different compared to any video I have made so far. In this video, I'm going to talk about a new strategy that I am developing, and it's currently still in development, so it's not 100% done yet. It still has some backtesting I need to do, and I want to do a little bit more research and maybe refine it a little bit more, but so far it's looking really promising. This strategy is a scalping strategy, so we're going to be mainly looking at the 5-minute time frame, and we're trying to only be in the market for maybe 15, 20, or 30 minutes max, really. This strategy is mainly focused around scalping, so we're going to be mainly looking at the 5-minute time frame and trying to catch very quick moves at the beginning of the Asia session. Many of you might be asking, why am I doing scalp trading when I have only talked about swing trading in my previous videos, and that's mainly what I've been doing for the past year and a half. It's been swing trading. So the main reason is that the drawdowns of swing trading is that when you get into a slump or you get into maybe a losing streak, it may last you months. So for the past 2-3 months, I think I've been in a pretty bad slump, just kind of at break even, maybe some losses, and it's just been very detrimental on my psychology, and it's very hard to keep that motivation going when you're seeing so many losses or breaks or break evens. So I really wanted to venture out into something that I haven't tried before, which was scalping, seeing if I can do daily trades, maybe 2-3 times a week, 4 times a week, 5 times a week, maybe once a day, and see how that works. The one thing that is really promising about scalp trading is that my psychology can be a lot more effective when we're placing more trades. Now, what do I mean by that? If I have 1 week where I am doing really bad, I have 2-3 trades that I'm losing, I can be perfectly okay with that simply because, one, I will have a higher win rate, which means I'm way more confident in my trades. If I have a 75 to 80% win rate, then I know I can make it back over time. 2, the slump only lasts for maybe that 1 or 2 weeks max. If I have 3 or 4, maybe even 5 trading days that are losses in a row, that's only about 1 week of trading. So next week I could come back with a fresh mind and still trade as confidently as I did the week before. So that is what I think is a really big advantage to scalp trading compared to swing trading. Just controlling your own psychology when you have a higher win rate can be very, very easy. And also, for me at least, if you have a win on a scalp trade and you won in the morning or whatever, you had your winning trade, then you're done for the day. You know, there's really no point to continue on and try to be greedy and try to win another trade. Even if it takes you only 15 minutes to make that one trade work, then you're done for the day and you don't have to trade anymore. You go back the next day, new minds, new start, and you can start from scratch again and just trade like you normally do. Compared to swing trading, you kind of have to wait for that whole week to finish, or maybe another whole week to finish, because the next week might be only a break-even week. So it takes all the big time frame, all those weeks to wait for the swing trading, and it brings it down all into basically a single day waiting for the next day if you do have maybe one winning trade or one losing trade. So I came here into Paint, and I'm going to kind of just talk about 2 main things about this strategy that are so key. It is the main bullet points for this strategy. Like I said before, I don't want to sugarcoat it. This is still in the process of being developed, right? I've done back testing for maybe about 50-ish trades so far, and 10 of them were losses. The other 40 were in profit and took profit with about a 1 to 1.25 was the average risk to reward ratio. So it's looking very promising. So that's why I kind of want to start making a little bit of content about it, maybe introduce you guys to this concept and see how it can potentially work out later on. I still want to do basically maybe another 50-ish trades as back testing to get a little bit more deeper analysis to see maybe it was just luck in the beginning. Maybe I'll have a little bit more better statistics with at least 100 trades that I can look back on. So let's get into the 2 main points I want to talk about for this strategy. The first bullet point that I want to talk about is bias from the higher time frames, right? So bias on the higher time frames is very, very similar to what we do in the swing trading. We're looking for the daily, the 4-hour, the 1 hour, the 30-minute. You know, we're looking for multiple time frames to be in sync, and what potentially type of market structure are they developing. So let's say we see the daily be bullish, we see the 4-hour is bullish, we see the 1 hour is bullish, and maybe the 30-minute is bearish or something like that, right? So what we're expecting is a bullish move, right? And we see that the 30-minute is bearish. So what can we do on the 30-minute or the lower time frames to continue these bullish moves on the higher time frames? That is basically where our second point of interest comes into play, and that is going to be having a market structure shift that is not only clean, but also has some sort of pattern that can be recognized pretty simply. So let me go into further detail. So I'm going to write pattern here just because there is one specific pattern that is the key, and which I've basically, for like maybe 45 out of the 50 trades that I back tested with the strategy, involved this one pattern. And I think you guys know what it is. It is going to be the head and shoulders pattern, right? The head and shoulders, the reverse head and shoulders, the absolutely key, most important part of this strategy. It is just so clean to see this on the 5-minute time frame, and it works so well. So this pattern has really good confluences already built into it. One is that we get a market structure shift, right? So if I put a little sub note here, we get a market structure shift, right? MS is market structure shift. So market structure shift is so important on the lower time frame because we're going to continue now the barrel roll into the higher time frames to continue that confluence for the daily, the 4-hour, the 1-hour, whatever it may be, right? So if the 5-hour is bearish, and then let's say the 15-minute is bearish and the 30-minute is bearish, and then we go to the 1-hour, it's bullish. Once this 5-hour goes from bearish to bullish, we can start to expect the other time frames to follow, right? Even though this may be bearish, this will turn bullish again to follow the higher time frame confluences. Now, again, like this is not 100% of the time, but we're only catching small moves here. So having a 5-minute shift of structure on the lower time frame using a head and shoulders pattern is going to be your key points of entry. So let's draw up a quick example for you guys, just so I can kind of break down the little more unique kind of points of this strategy to see where maybe a potential entry might be and where a potential stop loss and take profit will be. All right, so I'm going to start to draw up a little bit of market structure, and this is going to be on the 5-minute time frame, okay? We're only really focusing on the 5-minute time frame, which is going to be our key time frame on where we place our entries, stop loss, and take profits. So as I said in the example before, let's say all of our confluences are pushing bullish and we want to see some type of bullish move off of the 5-minute time frame. But our 5-minute time frame is bearish, right? So we see we're making lower lows, lower highs, we're heading downwards, and we get something like this. We see this happen right when Asia session starts. So right here we see a huge push bullish, and we can see that the 5-minute time frame is breaking market structure to the upside, right? We see that it's breaking this high level and is breaking this high level. It's just breaking multiple level points where we can see it's going to start to convert into bullish market structure. Once we are at this point, we see the break of market structure into the buy side, right? What do? We have to be patient still. Patience is key. We do not buy here and we do not sell here. We are waiting for the retracement. When do we get confirmation of the retracement? Only when we start to see bearish candlesticks develop to the downside. Once we start to see bearish candlesticks develop to the downside, then we could start to understand that we are in a retracement period on this 5-minute time frame. This is going to be when we're going to start looking for entry positions. We're going to set up our Fibonacci sequence, and it's going to be going from 0 to 1, and we'll have our key levels here, which is going to be the 0.5, and then we're going to also have the 0.618 zone. Now, why is this important? The Fibonacci tool is so useful. It is a great tool to use, especially when it comes to retracements, and it shows you a very accurate location where price is likely going to retrace into before continuing up the trends, essentially. So we're creating a new market structure, bullish trend. We're coming back, we're retracing, we're waiting for it to tap into the 0.618 zone. This is our entry point right here. We are going to enter at the 0.618 zone and then continue bullish upwards. Now, what about stop loss and take profit? Very simple. Stop loss is going to be at least 2 to 3 pips below the most recent low. If the low is down here, then we want to put it down here. Okay, but if the low is up here, we'll put it over here. We want to just cover all of the lower time frame market structure that was developed. So if we are wrong and it does continue down to this point, it's turning into bearish market structure. We are cooked at that point. We don't want to be interested in the trade. We're out of it. Where do we put our take profit? Take profit is very simple. We just wait for the either at this point, the recent high, or if there's a very strong level of area of interest that is a little bit higher up, then we can shoot for that area of interest as well. This will give us around always a 1-to-1 if we're shooting for this level right here. And if we're shooting for an upper area of interest, we're going to be shooting for right around a 1-to-1.5. This leaves a very nice profit margin for you here. And we can see our stop losses right around here with our entry right in the middle. So it's very, very clean. There are some other confluences that can be seen within this area to make sure you're getting a very nice entry. But I'm not going to talk about this in that. I'm not going to talk about that. Oh my gosh, I can't speak. I'm not going to talk about that in this video because I want to do a little bit more analysis on it and really give you guys some strong confluences. So as I do more back testing, I'm going to continue testing new pieces that I want to implement into this, and then I'll keep you guys updated as it goes along. But I kind of wanted to make this like a part 1 of this new strategy that I'm developing. And honestly, I think a lot of you guys might know who this is, but Tomtrades is a big Forex guy that I've been watching for a while. And this is a big key point of his strategy. He simply just waits for a market structure shift, comes back for a retracement, and he buys at a very key level, and he continues up to the upside, mainly for 1-to-1 to 1.5, right? That's a big basis of his strategy. So a big chunk of this comes from him, and also some stuff comes from Alex G and some other stuff that I've read on other YouTube videos. So I'm piecing together all the really good information that I really liked from all these different influencers or some other, I don't know, book that I read or something. And I'm just trying to mend it into something that really works for me and how I understand it very, very clearly. Thank you guys so much for watching. I hope you have very high interest in this because I am very, very interested in this new strategy. I'm going to work diligently to try to figure out the best tools and confluences that we can use to maximize this win rate, maximize our risk to reward on this. And I'll keep you guys updated. So if you have any questions, feel free to hit me up in the comments down below, or if you want to DM me on Instagram, I'll be happy to reply. So good luck trading this week. I'll see you guys later. Peace.